This video is sponsored by Bityard. With over 400 cryptos to trade on their spot, perpetual coin futures, USDT futures, with leverage of 1x to up to 125x, you can trade foreign exchange, commodities like gold, silver and oil, and traditional markets like Nasdaq, all with some of the lowest fees available on any trading platform. You can use their copy trader to copy other traders with better performance than you, or you can become a copy trader yourself and earn a few extra percent from the people that follow you. Plus, you got 9 out of 10 stars from the Coin Bureau guy. Bityard. Hello everybody, welcome back. So I thought I'd make this video about bullish and bearish divergence. So this is just regular bullish or bearish divergence. There are other ones, I'll make videos on those another time, such as hidden bullish or hidden bearish or phantom bullish and bearish. But the best one really is the plain old simple bullish or bearish divergence. So you've probably heard about it in the past, and it's actually really easy to spot. And the first thing that came to mind as showing an example of this is Bitcoin on the weekly, as we were doing our parabolic run in 2020 into 2021. So what we see here, I've cleaned up my chart. There's no other indicators on here. We've just got your RSI, which is momentum oscillator, showing momentum either building or depleting basically, and then your price. So the first thing we notice here is we've got peaks. We've got 1, 2, 3, 4 peaks. 4 higher highs on price action. And if you look down at what the RSI was doing at the time, we see 1, 2, 3, 4 lower highs. So momentum doesn't match the momentum of the price chart. And remember, price is only, a green or a red candle is only formed because of an imbalance of buyers and sellers. If there's more people willing to pay more than the market order for Bitcoin in this instance, then the price will go green because people are willing to bid for higher than it's actually worth at the time. Doesn't matter if the momentum is dwindling. If people are still stepping in and paying more than is required, for the market order, it will create a green candle. So you can get these disproportionate reads of momentum to price. But eventually, what normally happens most of the time is that if we have decreasing volume and momentum opposed to the price action, the tipping point will be reached at some point, and we can see that here in dramatic effect for Bitcoin. Remember, this is a weekly. So yeah, we've got our higher highs and we've got our lower highs here. And so eventually what happens is, the momentum shifts. So we've been seeing a clear divergence of momentum here that doesn't match price action. Normally you'll be looking for anything after 2 drives, and on the 3rd drive you'll be really sort of waiting for it to play out. On this occasion, it actually went to 4 drives of bearish divergence, and this basically led to a significant collapse in price for Bitcoin and all crypto alike. In the space of 35 days, it decreased by 56%, after the last drive of bearish divergence. So the last peak over here and the 4th peak over here, that is your bearish divergence. Now this, you'll spot this on any time frame, 5 minutes, 15 minutes, hourly, 4 hourly, whatever. It's just that this one instantly sprung to mind as a good example because clearly we could see it all the way up. And if anyone remembers this period in Bitcoin's recent history, people were going crazy, and you had all these buyers flooding into the market because of people like Elon Musk and Michael Saylor and all this lot. Everybody was going crazy for Bitcoin, but the warning signs were present on the chart to say that, all right, this is like it's a crazy period, and effectively the price is being pushed up by retailers going crazy on Bitcoin, buying at higher and higher prices. But momentum is leaving this chart, meaning that we are very close to a peak. In all fairness, on a 3rd drive of bearish divergence, you would be looking for the peak, for it to collapse. This would have been your 3rd drive. It didn't. We still went up. Well, we did collapse a little bit, and still the retailers pushed it back up again. We got a 4th drive, a significantly lower high there, forming the more or less getting the top of it, really, isn't it? More or less marking the absolute top, a big plummet down, and then a continuation all the way. So we can apply this same thing to bullish divergence. I'll see if I can find an example of that for you now. Right, so I've found an example here that we can look at, a significant one as well. This is Bitcoin again, but this is Bitcoin on the daily. So we're looking for the opposite of what we just looked at, which is higher highs with lower highs. So this is bullish divergence, waiting for a breakout of price action. So we're seeing momentum building this time, which contradicts the downtrend that we're seeing in price action. So we found a nice big peak over here in 2019, and we've been consolidating for the best part of 6 months, right? It's a long time. And what we saw is that the price action with the lows and the highs matched the RSI, so that's fine. So price and momentum more or less the same. There's no edge on here at all. We started to see a difference form around this low here, so a significant low formed here with a low on price action. Okay, so you wouldn't notice anything different there. As we continue to make lower lows on price action, we actually found ourselves making higher lows on the RSI, and again we found a third drive here of a lower low on price action with a higher low over here. So this would give the good indication that actually with this building momentum on the RSI giving us bullish divergence, opposed to the price action giving us lower lows the entire time, this is a classic read of bullish divergence. And I remember this one being played out at the time and taking the plunge on this because of the bullish divergence and effectively what looked like a double bottom as well. And then lo and behold, that third drive of bullish divergence played out to a decent extent, a 63% move. Now, don't worry about what happened after that. That was a that was the COVID March collapse. All traditional markets did that. That's called a black swan event. That couldn't particularly be spotted on the chart, but we are seeing a classic read of 3 drives of bullish divergence which played out to a decent extent and yielded a 63% move. This was on a daily. So that is a nice and simple way to look at it. It is quite simple. There's no reason to go into further detail about what's bullish divergence and bearish divergence. That is it. It is kind of that simple. And that is how you would look to play it. Now, it doesn't mean that it has to play out every single time, but it does work a lot of the time. It's one thing that you should take on board with other indicators to see whether or not there is a difference in momentum versus price, whether that's for bullish breakouts or bearish breakdowns. Anyway, that's pretty much it. I'll leave it with you there. Thanks for watching. Hope you have a nice day. Take it easy.